This is an exciting time for all of us to have such lead availability, such incredible compensation, such great training, and put ourselves in a position where we're layering on all these additional, and it's not all these, and it's not like a big heaping pile of additional things. You find a client that has extra money, right? They make decent income and they want to start saving more for retirement, IUL. You run a client that has some savings, some money, and they're not happy with what it's doing, or they're happy with what it's doing, but they want to protect it, annuity. That's it. It's not every client, but it's now you have additional arrows in your quiver to put yourself in a position to protect these clients, make them clients for life, and increase your cash flow within your own business. All right, guys, Grady Paulson here, Family First Life America. Beyond excited to have Bridget Reimer, the director of Simple Retirement Solutions, and all around wizard of what makes this life insurance industry so amazing, which is taking advantage of all of the different things that we can do with it, from term, final expense, mortgage protection. But how about we layer on the additional products, which is what we're more excited about, which is IULs, and now specifically with this training, annuities. So Bridget Reimer is here with us. She's going to cover annuities, Annuity 101. And I'm going to pass it to you and let you do what you do incredibly well.
Sounds great. Thank you again, Grady, for letting me share another training with your team. I'll share my screen here and we will get rolling. All right, you can see that there?
Perfectly.
Okay. All right. So you guys, this one is, I want to hone in on Annuity 101. I truly believe confidence is key, right? When you're confident and you think you know what you know, you're more willing to talk about it, okay? And people are intimidated by annuities and what annuities are. And so I want to just break that down today to diffuse that, to take away the negative connotations, to help you understand what it is, and then what purpose do they serve for our clients, right? Who makes a good annuity client? So if we were to Google, which is what I did here, a definition of an annuity, this one was according to annuity.org. You could read through that, right? Annuity is a customizable contract issued by an insurance company that converts its investors' premiums into guaranteed fixed income stream. Sure, that's a traditional sense. Then if you keep reading, it starts to get complicated, right? More specifically, annuity contracts legally binding, written agreement, insurance company that issues the contract, transfers risk, longevity risk, all these words. And I'm doing that fast on purpose, not just because I talk fast, but I don't care what that means, right? My goal is to not Google. I don't want you to Google. I'm going to break that down to the basics, right? What does that look like? What does that definition break down to? And what do I actually need to know and be confident in to represent these products? Okay. So I'm going to pull some of those words from that example because they are important. Number one, it's a guaranteed contract because it's an insurance product. It's not an investment. Okay. A fixed index annuity is not an investment. So we get safety in that by guarantees. That's how we don't lose money. Okay. Number two, it's backed by a state guarantee fund, not the FDIC. And the reason I want you guys to understand that that's important because companies, and it goes with my third point there, companies, annuity companies have to go through third-party audits every single year in every single state that they do business in. The FDIC does not, right? So people, that's one of the objections we get a lot. Well, this isn't FDIC insured. Yeah, you know what is? Banks that go under, banks that lose money, right? This is an insurance contract. And so to do business in those states, we have to be backed by that state guarantee fund, which backs your money. And it's different in every state case, some $250,000, some up to $500,000 with each company that you have money with. And do you know that the average annuity is $180,000? So we're well within that limit of being backed by the state guarantee fund. The state has to actually pay you your money out if that insurance company goes defunct, okay? Which we haven't had an insurance company do that. And it's because those third-party audits, they have to prove solvency 1-to-1. And what I mean by that is for every dollar of money they have of a client, they have to be able to prove they can pay it out in asset. So they have $100 million. Their third-party financial audits show that they have at least $100 million to pay out every client should they walk away today. So like the bank crisis we're seeing out there where everybody's pulling out their money and the bank can't pay it, annuity companies cannot get themselves in that position, okay? Clients must qualify for this product, unlike other investments. You have to be suitable. It's called suitability. You have to qualify for it. So it's not like other investments where I can walk into a bank and take out a CD, or better yet, do you know how easy it is, Grady, to sign up on E-Trade, right? Like E-Trade, transfer money, buy stocks, mutual funds, have no freaking idea what I'm doing, right? But I can do it. I don't have to qualify for that. They don't ask how much net worth I have. So there's protection in that, right? They're doing what's best for the client. I touched on that already, financial suitability. Annuities are not health related. We get that question a lot. There is no health underwriting to an annuity. You don't have to be healthy. And so we're going to touch on that when we talk about who makes a good annuity client, but it's financial based, not health related. I do want to touch on the fact that definition told me it was customizable, and that's actually an awesome feature of annuities. It's not one shoe fits all, right? We can do lump sum versus multi-premiums. We can build them for income versus growth. They can be customizable to what your client needs. And that's where we touched on the Ask a Specialist in our last training. That's where we come in, right? But most important, like if you were to take away anything from what an annuity actually is it provides protection for retirement. And why do I use the word protection? Because protection to me means a guarantee, right? It means I can count on something. And so what is that protection, right? The main goal of an annuity is protecting people's retirement. And we do it with insurance, not investing, okay? We transfer that investment risk to the insurance company. So to illustrate that super simply, this is what I come up with for you guys. And hopefully you've seen this before. If not, they're great statistics, right? So we're dealing with insurance. What are things that are comparable to that? We have home insurance, right? In fact, if you have a mortgage, you're required to carry homeowners insurance, but there's less than a 0.3% chance that you actually have a house fire next year where you make a claim on that homeowners insurance, okay? What about term life insurance, right? That's something we sell a lot of. And believe me, this is not to negate the need for that. I actually think it's super important, but there's only a 1% chance that a term life policy pays out a claim. Did you know that? That's it, for a multitude of factors. People let their policies lapse, right? So it never pays out a claim. Or maybe you lived with a 30-year term, so you didn't pay it out. If you have cash back, that's great, but the claim didn't pay out. There's only a 1% chance. Yet we as life insurance agents believe in term life insurance, right? That's how we bolster our coverage. That's how we get it, right? And I have two very personal examples of why that's important, right? I was widowed at 22 years old, didn't have insurance, no term life payout because I didn't have it. But 2 years later, my dad dies. He had term insurance. So he was that 1%. Talk about a comparison and believing what you guys do out there. We do it. We sell insurance, even though we have a 1% chance. We believe in how important that is. What about an auto claim, right? We all drive every day, everywhere, and we're required by law to have auto insurance, right? But there's only a 5.5% chance of you actually claiming the insurance, but we believe in the insurance. So what is my point here with protecting retirements? Why should we use insurance, like a fixed index annuity, protect retirement? Because there's a almost 27% chance that the market goes down next year. And insurance is what we can do to protect against that. Okay. And that is, if you learn one thing about a fixed index annuity, just wrap your brain around the fact that it protects retirement. And we are in the business of protecting people, right? Like Grady was saying, we're protecting people's number one asset, their money, right? Things that they can't afford to lose. So we do it using a fixed index annuity. And I briefly touched on it with our introduction on the 3 points, and I'm just going to re-hone in on those. And Grady, the reason I repeat some of this stuff, like these 3 points of a fixed index annuity, is because I want you to commit it to your brain, right? Like I want you to learn these 3 facts, because if you can learn these things, you can talk to anybody about a fixed index annuity, not just your clients, but anybody. I mean, I've literally sold annuities to like the girl doing my nails, because she's like, well, what do you do for a living? Well, I study annuities. Well, what's an annuity? It's these 3 things. You want one, right? Like, and I'm sounding like kind of silly, but I'm serious. It's that simple. Okay. So I want to take away the confusion and the complexity and show you again, these 3 things that the annuities that we represent, the ones we can sell, again, not securities world, not variables, right? The ones that we can represent can do these 3 things: eliminate the market loss, never lose money in that market again, right? Number two, we still get to participate in the upside of the market, but have a much higher earning potential than other safe investments because we're indexing in the market. And the indexing is what allows us to transfer the risk to the insurance company because they're the ones doing it, not me, not with my money, right? And then number three, every annuity, again, can create a paycheck for life for you and your spouse. This is a feature that is unique to annuities, right? Because it's the guarantee I'm talking about. In our IUL examples, we show how we can take tax-free loans, but that's not guaranteed, right? If the money ran out, it's not there. Whereas an annuity, if you're using things like income riders or annuitization, you can guarantee that paycheck for life. So talking about what types of money can we use for an annuity, okay? In the most basic sense, there's two types of money. There's non-qualified money and there's qualified money, okay? We're going to focus on non-qualified here for just a minute. Non-qualified is post-tax money. This is money that you've already paid taxes on. I referenced that before, but it's, I got a paycheck and I stashed some in my savings account, or maybe I cashed out of the bank and put it under my mattress. Maybe I sold a car and I got cash for it, right? Those are all non-qualified assets that we don't pay tax on again. But note there, you'll have tax later on the gains. And that Grady asked in our previous training, is that tax-free? And I'll explain in a minute why that's not, right? So on non-qualified money, you've already paid tax on what you put in, but if that grows, you'll pay tax on the difference. Okay, so you're going to pay tax on any of the gains in non-qualified money. And listed there is a bunch of different non-qualified money type accounts. We can use all of those for an annuity. Okay, on the other side, we have qualified money. Now, this is pre-tax money. This is money that we have not paid taxes on, with the exception of a Roth IRA. A Roth gets to claim the qualified status, but a Roth is a super cool, unique, qualified vehicle. You pay tax on your contributions as income right now. Like right now, when I contribute to my Roth, I'm paying taxes, but I get to put it into a Roth IRA. It gets to grow tax deferred. And here's the cool part. When I take money out, I don't have to pay tax even on the gains. Okay. I don't have to pay tax on the return of premium. I don't have to pay tax on the gains. A Roth, once I've contributed it, I never have to pay tax again. But it's still considered qualified. So just put a pin in that and remember that when you're talking, to clients and trying to be confident in this stuff. A Roth is still qualified. But down below are a bunch of other vehicles that are qualified. We have IRAs, SEP IRAs, TSPs, pensions, 401ks, 403bs, anything that is typically called a retirement account, right? Anything that you have not paid tax on, again, with the exception of a Roth. But guess what? All of those types can also be put into an annuity. So we have two different buckets. All that determines is how it's taxed and how it's classified. The good news is everything you see listed on that page can be used for an annuity. So with that base knowledge and understanding, who makes a good annuity client? Like who should we be selling these to, right? I believe everyone should have an annuity for different reasons, but here's some tangible things, right? We run into a client who has a lump sum versus monthly premiums. Maybe they don't have the extra $300 a month to put into a policy, but they have the IRA or the retirement account or the savings account that we can put lump sums into. Annuities are a great lump sum fit, okay? Qualified money. So I just defined what the difference was for those. Qualified money cannot pay for life insurance. Okay. So you cannot take your 401k and fund an IUL with it. So what's our alternative? An annuity, right? And some people will even use the latter approach in that they'll take the qualified money, the 401k, put it in an annuity, and then you take distributions and pay just a little bit of tax at a time and use those distributions to then pay for a life insurance policy. Right? You've just now created the income the client needed to be able to fund the life insurance policy using the annuity. So that's a double sale right there for you in the home and a great approach for your clients to be able to get the best of both worlds. So qualified money is a no-brainer. If you ever run across non-qualified money, you're looking at an annuity, not a life insurance product. Okay. What about health conditions that limit coverage or make it too expensive? Maybe you have a client who's just really not going to qualify. They are on a ventilator. They can't breathe without oxygen, right? They can't get a policy. Maybe they can't even get a graded final expense policy. They can still get an annuity because remember, it's not health based. It's all financial suitability. What about people who have enough insurance in place, but they still want to set aside funds? Maybe they're bolstered up in term coverage and whole life coverage, and they don't really need more life insurance, but they have this money and they want to put it somewhere. and they don't like risk, right? So they're not going to go invest in the stock market or something like that. We have annuities that they can put monthly premiums into. Okay. Self-insuring is another person who can make a good client. They can't be convinced of insurance, right? Because you've met those people. Well, I have enough assets, I don't need life insurance. I'd argue not. I'd argue you still need life insurance to use that to fill this one bucket, right? We still need to have assets that we specifically allocate for that. But for the people that you can't argue with, what about an annuity, right? They have enough assets. Well, are all your assets protected? Do you have any safe investments? Should we diversify and put some into that, right? That's self-insuring. What about older clients who are just past the qualification age of life insurance? We have annuity options that go up to age 90. Okay. Low risk tolerance individuals. I kind of touched on that with the enough insurance, but people who just they're never going to go buy into the stock market, whether they should or not. I'm not arguing that, but I'm validating them and meeting them where they are. They have a low risk tolerance. They don't want to lose money. I'm not going to convince them that they should allocate into the stock market because I'm not a financial advisor, right? But I could offer them a product that meets that need, the low risk tolerance individuals. And then finally, and the most obvious one is retirees, right? The transition of some assets to safer investments. When we're in our earning years, right? It's the recommended safe diversification is to have 60% in your stocks and mutual funds, 40% in your bonds. And that's the bonds are considered what's safe. The rest is kind of risky stuff. We know that we probably need to invest in both when we're in our 30s, 40s, trying to build for retirement, right? But when you retire or the 5 years leading up to your retirement, it's recommended to transition to the opposite, where you now have 60% in your bond type portfolio and 40% in the risky stuff, so that you can still use that portion to outpace inflation, try to keep up with the big gains in the stock market. Well, guess what? An annuity fits the bond need. Okay. An annuity serves the purpose of safe bond portfolio. Okay. So retirees, the most common. That's also people looking at spending down their assets. An annuity is a great way to safely spend down your assets. And so that's probably the most popular. But as you can see, basically everyone could make a good annuity client. And that's what I want you guys to start thinking about and wrapping your head around, that it's not honed into just one person. It's not just the person retiring and who needs to move their 401k. You can get creative and use annuities in all aspects of that. And that is what I have for you today.
Holy smokes. So, yes. Okay. So a couple of things. The different types of annuities are like immediate. I get immediate income. I can have delayed income. You touched on one for a second where people were too sick, and it'll make it bigger down the road. Like if they're too sick, but they want to buy life insurance, I have 50 grand. I don't really need it. I want more life insurance, but I thought that one was interesting because we've all run into sick clients, and I think we're kind of gathering the concept to protect money, but that's a really cool, is that a cent or?
So that would be, so if you are having someone who they came into this wanting life insurance, but they can't qualify, right? Okay. I would actually focus on a growth annuity for that, a legacy, right? Where we're using that money to leave a legacy where they would have maybe purchased life insurance, which arguably would give them more death benefit, right? Because you pay a premium for an increased death benefit, whereas in an annuity, the money you have is what's going into that. Now you get to count the bonus and maybe there's some roll-up features on that, but I would actually focus on a growth annuity, Grady, that has no fees, no income riders, something that just grows rapidly. The agility is a great option for that because you can use the benefit base, even though it has an income rider. You can use the benefit base as a legacy instead, if you don't use the income rider, or something like the Performance Elite, which is just really aggressive growth focused, right? They have the highest bonuses. So yeah, there's options for that. And what people describe that to me as when I see those come across my desk is legacy. Look, they're looking to leave a legacy. I will immediately gravitate towards something that boosts the death benefit as much as I can.
I love it. Will you touch on, with this being Annuity 101, will you talk about Firelight again?
Yeah, so Firelight is a great resource we have available in our annuity division. It is an e-application platform, which you guys are probably familiar with because some carriers use it. But what's cool about the SRS division is we have a Firelight portal that is only for our agents, right? And all of your annuity applications with every single carrier are all in one spot. So you go to one Firelight link, it has all of our carriers. But what it does is allows the application to come to our office first, and we're the ones who are pushing send to the carrier, which we're only doing when we're confident that application is going to be approved. So we catch mistakes all the time. I mean, you guys aren't expected to know the financial suitability rules like the back of your hand, right? So a lot of times we'll get things that come across our desk where maybe the net worth wasn't high enough to qualify, but we know what that number is. So we can let you know, like, hey, are you sure you included all their assets? Did you touch on this, and this, right? And a lot of times people missed it. They're like, net worth, I think it's this, right? And they put something down. We're underwriting those. I call it underwriting because that's essentially what we're doing. We know the guidelines like the back of our hand. So when we push submit, we're confident that that annuity is going to be approved by the carrier. And if not, we're going to work with you to see if that client's a fit or not. Grady, honestly, sometimes there's ones I come across where I have to tell people that's really not a good idea. That client really shouldn't have an annuity because that's all their money, right? I don't want you to put all their money in there. But we work with you on that. So the Firelight application tool is a fantastic resource. Our approval rate is way higher through our Firelight than if you were to go to direct to the carrier. They get NIGOs, not in good order applications all the time if you use the carrier website, where ours is pretty close. It's like 95% approval rate. So that's pretty good. We're still humans reviewing it, right? Full disclaimer, we can make mistakes too, but your chances of getting that stuff approved much faster is very likely.
It's a phenomenal resource and asset. I couldn't imagine trying to navigate my first one and not having you guys. And then to now you have software that makes sure I really, like, cause I did paper apps and then I had to scan them and send them in. And now it's all just one simple, it's one simple e-app. It's just a tremendous resource. So agent finds, let's give a quick timeline. And then I want you to, whatever, not a guarantee, but an approximation on commissions, and we'll get you out of here. Yeah. But just so, like, if I meet with Dolores today, she's got $100,000. My timeline from today towards me getting paid or her getting protected, we can look at both because both are important, because my time's important, as is her assets. What does that look like for the agent who's kind of looking at this and going, I want to start setting up and getting these as part of my weekly and monthly workflow?
Yeah, absolutely. So when you are applying for annuity, it is going to take a little bit longer than your traditional life. That's because it's two-part, right? It's approval, and then it's transferring money. You're actually taking someone's assets and moving them to another company. So that's the part that takes a little bit longer. Approval, if you're using our Firelight e-app, is less than 7 business days, okay? Sometimes when the annuity carriers get backed up, that can, especially happens, Grady, when you're in like a crazy market and everybody wants to get an annuity right now. They get like an influx of business, right? But typically less than a week to get that client fully approved with the carrier, okay? Because there's not, you're not going and doing blood, parameds, anything like that. It's just underwriting, which the carrier does. So less than a week, okay? The longest part is the transfer of funds, like I said. But here's the thing. If you're proactive about it versus like, oh, I signed the form and I just left it up in the air for someone to hopefully transfer the money, think about it. No company is willingly giving that money up, right? Like if I have the money at ABC company and I want it to go to XYZ, well, ABC company is going to fight for that client because they want that asset. They want to keep those assets under control, right? So as the agent, you can prepare your client for that and be proactive. That's where I talked about previously our transfer department. We'll get on the phone with you and your client and that transfer company, and we're kind of bossy, so we know how to demand the money. And we know the words to use, we know the forms to ask for. So the more proactive you are with that, 30 days, right? It should not take that long. Some can take longer. Sometimes you're dealing with retirement timing. So Joe Schmo retires from, company ABC, and they have a blackout period where you have to wait to get your 401k out. You run into stuff like that, right? But most of our cases could be issued and paid within 30 days if you're on top of it and preparing your client the right way for that, right? And using us, just use us, right? Like we kind of know what we're doing here. So if you do that, I would say 30, max 60 to 90, right? But that's for the cases that really get held up for some reason, which shouldn't be happening. Typical commission, I'll touch on that. We have awesome promotion guidelines on the annuity side. It does not follow your FFL comp because it is more condensed, right? Annuities are not meant to be a structure thing. Dealing with people's qualified money is a little more controlled than just paying out a commission on a life insurance premium. So there's not as many levels. So every new agent with FFL starts at what we call the green level. The traditional or typical payout on that, if we're basing it on let's say 65-year-old 10-year product in the state of Idaho. Okay. Because product commissions are obviously going to vary by age, product, all the stuff you guys already know. On that, it's typically around a 5% payout. Okay. So $100,000, 5%, so you get $5,000 and it's $5,000. Like that's a pretty big deal for people who will help support you through the whole way. And then guess what? If you issue $100,000, we actually promote you to the next level. And now your commission is closer to 5.75 or 6%. And so we have very generous promotion guidelines. You can find those on the website, fflams.com. Nothing secret. We spell it all out there for you. You can see every compensation level you can obtain. And we're true to that. We automatically do it. You don't have to come knocking down our door to get your raise. We calculate them every month for you and then put those in. So very generous on that side. But yeah, starting agent around 5%. It's even a little higher than that, I think. But
amazing. Where do we find Firelight? Is that FFLAMS? Is it all find everything? Everyone will find everything there.
Yeah, you can find the link to the Firelight there. You do have to be set up as a user. I will tell you that our protocol is when you submit and ask a specialist, I automatically add you to Firelight so that you're ready to go. So I add you as a user, you get a welcome email, but if you can't find it, go to our website. The link's there.
SRS in the comments below. Drop it 100 times. Show Bridget some love. Thank you so much. Appreciate you. Looking forward to continuing this. We'll keep bringing you on every couple of weeks. And it's been awesome. A tremendous educational. I can't believe how excited everybody is. I've been getting texts like crazy. Good. Just thankful for you and more fun to come. We'll talk soon, Bridget.
Thanks, Brady. Take care.
All right. Everybody, that was this is such a simple concept to continually put ourselves in a place where we're continuing to grow, right? People will stay with you far longer if they're growing with as people, even if they're not making money. If you're a leader out there of 1, of 10, 100, or 1,000 people, putting yourself in a position where you strive each and every day to educate yourself more, going through and learning these products, and then going through and actually starting to submit some business. I mean, making a $5,000 commission by helping Dolores protect her retirement income sounds pretty incredible, right? That sounds like 5 families. And guess what? How the chargeback rate on annuities is very low. Can't guarantee or promise anything, but it's not even a chargeback. It's a cancellation, right? They just go, you know what? I need to buy a second house. I need to buy a tiny home for my daughter that needs to now move into the backyard. So, they don't decide, but before you go submit the policy, say, do you have any children that might need a tiny home that we need to probably prepare for? And if they go, no, then you're feel free to submit the policy. As I joke. But the reality though is, guys, this is an exciting time for all of us to have such lead availability, such incredible compensation, such great training, and put ourselves in a position where we're layering on all these additional, and it's not all these, and it's not like a big heaping pile of additional things. You find a client that has extra money, right? They make decent income and they want to start saving more for retirement, IUL. You run a client that has some savings, some money, and they're not happy with what it's doing, or they're happy with what it's doing, but they want to protect it, annuity. That's it. It's not every client, but it's now you have additional arrows in your quiver to put yourself in a position to protect these clients, make them clients for life, and increase your cash flow within your own business. So guys, beyond excited, grateful to Bridget, and get on FFLAMS, get your leads, make your money with life insurance, make your fortune with Simple Retirement Solution products, guys. My name is Grady Polson. Grateful for having you on. We'll see you next week. Bye for now.